Right? We're recording and we transcribing. Perfect. Let's rock and roll.
Let's do it.
Hello, everybody, and here we are one more time, another week with my good friend Andy Gagliano from Gagliano Mortgage, and my name is Tony Alvarez from Keller Williams Hoover, and I'm going to be talking a little bit of everything and anything, and some of the upcoming listings that I'm going to have, and a little bit of the interest rate. And the most important thing is that I'm not going to ask Andy how good he's doing today. And the reason why is because I know, in fact, that he is doing fantastic. What's going on, Andy?
Tony, I'm chilling out. I'm casual today. Got a t-shirt on. I had a ball cap on, so my 3 or 4 hairs on my head are a little messed up, but I had a ball cap on. It's casual for me this week. I am at the Gulf. This is my first visit to the Gulf of America. And so I've been to the Gulf of Mexico numerous times in my lifetime, but this is my first visit to the Gulf of America. And so it's we've been here for a couple of days now and beautiful sunny days. It's been a little bit windy, but I can deal with that.
Yeah, definitely. Well, I'm glad you're enjoying. I can't wait to go visit the Gulf of America myself. I've been in the Gulf of Mexico several times, and I love it. Let's see how the Gulf of America looks like.
Yeah, see how it compares.
It's a good thing.
I've yet to step foot in the Gulf of America because it's been a little chilly and windy, and it's double red flags. So, but I will dip my toes in the Gulf of America, and I'll let you know if the water is less salty than it was when it was the Gulf of Mexico.
Well, less spicy, probably. You never know.
It will definitely be less spicy.
That's a good joke. That's a joke of the week, people. Let's take it, easy. We're not really political. We're just having fun with what's going on in the world. Well, Andy, this is something very interesting. I saw on Facebook a comment. Actually, was a post, and the guy was asking why the sales of real estate, home sales, especially here in the Birmingham area, were so low. And he was asking if it was because of the new presidency, or because the new NAR settlement. Well, let me tell you something. Has nothing to do with the new NAR settlement, because that really is not new. What is new is that now is forcing the realtors, the one who got ethics, to explain properly to the buyer how commissions get paid, who pays it, and in case the seller don't pay the commission, the buyer is going to have to pay all of it or part of it, whatever you as a buyer agent should charge. So that's one of the things. So that really is not affecting. I haven't heard any realtor here in the Birmingham area, at least not yet, the ones that I spoke with, complain about that. Business as usual. And about the presidency, because we got a new president and everything, they want to put everything political. And I just say, no, that has nothing to do either, because a year ago on March 13, 2024, we have a different president. The interest rate was 6.94. On March 13 this year, interest rates 6.84. So the previous peak that we have on interest rate was back on October 19, 2023. And that day, the interest rate was 8.03%.
Mm-hmm.
And the most recent low in interest rate that we have, odd enough, was on September 11, 2024, and it was 6.11. So it really, let's not get political into all this. Let's get the facts. Let's get the numbers. Last year on February 2024, just on Jefferson County, I had the numbers somewhere over here, and I don't know what I did with it. The sales in Jefferson County was around 600 and something homes sold for the month of February. This year, for the month of February, we sold 96 houses less than last year. So percentage-wise, it's not that much. So
Yeah.
really trying to blame one thing or another, it really doesn't do any good. It's just, I believe the consumer is becoming more knowledgeable. I mean, they're watching our videos, right, Andy?
That's right. That's
And
exactly
we're
right.
trying to teach people and show them what really matters, especially with interest rate or not. So I found that a little bit interesting, that post on Facebook, and I have to answer it. And that was my answer. What do you think about that, Andy?
Yeah, I think that's a good answer. What's interesting to me is you gave those rates and those dates, those times that those rates were effective. And do you know that October of 2023, when the rates were at the highest that they've been in 20, what was it, 20? No, it was 30 years. I
30
believe that was
years. I think
30
it was like
years.
30
Yeah.
something years. Yeah.
That over the past 24 months, that has been one of my two busiest months. So, what drives the real estate market? Well, the interest rates do drive it some. No, I don't think there's anyone out there that's going to say that mortgage rates don't drive the real estate market, at least to some extent. But I think that a bigger driver of the real estate market is consumer confidence. How confident are we as consumers that, number one, we're going to have our job tomorrow or this time next year or 5 years from now? And what is our outlook for the economy going forward? And I would just say, personally, as far as what I'm seeing this year, the spring is shaping up to be a little bit better market than it was spring of last year. And there's still a lot of uncertainty in our economy right now because of these tariffs that are being proposed. And now this is getting a little political, but I'm not making a statement one way or the other whether
Correct.
tariffs are good or bad. I'm just making a statement of what I believe is fact, and that is that the uncertainty of the tariffs. Are we going to have the tariffs or are we not going to have tariffs? That is affecting some people's comfort level with our economic state at this point. And so, you know, I'm saying that, and don't forget the breath before I said that. I said I think that this spring is shaping up to be better than last spring. So there are so many different factors that go
Yeah.
into the real estate market, and I get it. I understand when people have questions or want to speculate about things, that it's just hard to do. It's
Yeah,
hard.
and I agree with you about the spring market this year is definitely looking different and looking better, regardless of everything that's going on. I think people finally realize that whatever happened with the tariff, whatever happened with, uh, as long they have a good job and they been, surviving all these up and downs during the years, they're gonna be okay.
Yeah.
People has learned that, from the mistakes from the past. Now we have a lot of people who's sitting on their homes with a lot equity,
Oh, yes.
and that's something that back in 2008 and 2007, that was one of the reasons we have the
That's
problem that
right.
we have, because people had fictitious equity.
Yeah.
We inflate the prices and we inflate a lot of things back then, and people didn't educate themselves financially. Now, after that, everybody educate themselves, or the majority of people educate themselves. And then when we have the interest rate, 2-3%, people took advantage of it. They bought their homes and they're sitting with a lot of equity and they're not using that equity. Some people is buying investment properties and being more smart with their money.
Right.
So one of the things that I noticed also, and I received a call last week. It was a very interesting call, and I'm gonna get in some people's nerve, especially real estate agents. Uh, I have a guy call me from Las Vegas. He had been watching our videos, so thank you very much.
Awesome.
And he called me. He got 5 properties here that he bought a year ago in February 2024. Investment properties. Thinking, I'm I'm advocate always for investment properties here in Birmingham. Birmingham is a good place to invest, but you have to be smart and you have to be working with a knowledgeable real estate agent, a knowledgeable realtor that is honest, that is ethic, and that is in to help you increase your portfolio and not just for the commission. Uh, and after reviewing what he sent me, the properties he sent me and everything, he wants to get rid of all his properties. There is a better opportunity for him in Las Vegas to invest all that money, so he's going to take advantage of it. And I think, and I'm going to say it very bold, I think the agent that helped him screwed him.
Hmm.
He didn't give him real numbers about the properties. He paid too much for those properties. And I went and looked a couple of properties today. One of the properties looks fine on the inside, it's fine. Outside needs some work. Another property, they have a tenant evicted, and I could go in and I peeked through the window and all nasty and everything inside. And that property that they had the tenant that got evicted, interested enough, they put a lot of money in rehabbing that property. And now they're losing, they're upside down.
Wow.
They're losing money on all that. Luckily he bought it. He put a lot of money down payment, but all the 5 properties have been financing. So there is a mortgage on each property. I think he used the DSCR loan. So we're still talking and discussing about it. And now that he wants to sell all those properties, I'm really, really upset because I don't know who the other agent is. I haven't asked. The properties were sold off market. But I did my little research and kind of like I have an idea where what happened over there. But listen, if you are an investor and you're planning to invest in another state, regardless, Alabama, Georgia, Louisiana, Mississippi, and if it's so too good to be true, it's actually too good to be true. Simple as that. If the agent that you're working with is giving you great, perfect numbers and telling you, wow, this is going to be great and everything, I'll be cautious about it.
Yeah.
Simple as that. Because that's if you work with an agent, the first thing you're going to ask him when you're going to start investing, asking how many investment properties he has helped by other investors, how many clients he has, out-of-state investors, especially. Can he provide with reference from out-of-state investors saying that, yeah, he's knowledgeable, he helped me sell, buy, and why not? That's one of the first things you need to talk about with whatever agent you're choosing to work with, especially when you're not able to travel and go and see those properties by yourself. Make sure you get real pictures. Nowadays, video calls it's easy.
Yeah.
So today I went to see the property. I did a video call with the guy. He is in another state and we're going through the whole things and I'm showing him everything and I'm giving him my 2 cents. And he told me, Tony, thank you, because you're not telling me what I want to hear. You're just telling me the facts. And that's my job.
Yeah.
My name is there. Not sure what kind of I know I think I know. He said, I got to ask him again. It's a DSCR loan. But Andy, let me ask you this. If he got that loan, it's been a year, but I don't think he has a prepayment penalty. Those loans come with prepayment penalties anymore, or?
Yes, actually, the DSCR loans do have a prepayment penalty, but a lot of them do have an option to buy out that prepayment penalty or to buy it down. So a lot of our lenders will have kind of a standard term for a prepayment penalty of 3 years, but you can buy that down to 1 year. Some of them will even let you completely buy it out altogether, so that there is no prepayment penalty. And usually the way that works is, let's just throw out an example. Let's say your interest rate based on your credit score, your down payment, and the loan amount for that property today is 7.875 on a 30-year fixed with a 3-year prepayment penalty. Well, it might be 8% with a 2-year prepayment penalty and 8.125 with a 1-year prepayment penalty, and maybe 8.25 with no prepayment. So there's not a huge difference in the rate to buy that prepayment penalty down or buy it lower. But again, a lot of it just depends on what's someone's intentions for the property. Are they buying it to hold long term? And if so, then go with the 3-year prepayment penalty. Unless you think rates are going to drop over the next 3 years. And if you think rates are going to drop over the next 3 years and you think you have a chance to be able to refinance that loan over that 3-year period of time, then buy that prepayment penalty down. And that's usually what we do for our clients, is to say, hey, especially right now, we'll tell them, hey, we think that within the next 3 years, you're going to have an opportunity to refinance, lower your interest rate. So let's buy the prepayment penalty out altogether, or let's buy it down to 12 months. And most are in agreement because there's just not a huge difference in that interest rate between a 3-year prepayment and a 1-year prepayment.
And you say the key words over there. What are their plans for their investments? What are their investment goals?
Right.
It's long term. You just want to invest for 3-5 years and then recoup your money and sell. Or I have many of my investors from California. Their goal, their plan, the investment plan is 7 to 10 years.
Mm-hmm.
No less than that. They're buying and rented for 7 to 10 years, and then at the 7th year they review and see how the portfolio is performing and get rid of some of the properties to reinvest it in something else. And the ones that are performing good, they'll keep it.
Right.
Then they'll review it on the 10th year.
Yeah.
And that is important. That is something that if you're planning to get into the investment game, you need to have a plan. Even if you already been doing it for years. I got guys that have been doing this for years and they still not sure what they want to do with their properties yet. So think about it. You get the tax benefits, you get positive cash flow income every month, you name it. So you need to think about it, what exactly you want to do with these properties. Unfortunately, this guy, and I'm going to do the best I can to help him, but I don't think he's going to be making any money. So what we're trying to do is amortize the losses, make sure the losses are not big. The less he can lose, that would be great, Like I say, I'm not in for the money. I'm not in for the commission. I'm more for helping and, making sure that my clients, my investors are taken care of.
Yeah. That's it. You hit the nail on the head. If someone's new to investing or just getting into investing, I think that most of us go into any relationship thinking that relationship will work, that everything will be fine. But we need to be prepared just in case. And so if you are new to investing and you're not sure whether or not you're going to like being a real estate investor, a landlord, then talk to your realtor. I can't say this enough. We work with a lot of realtors, obviously. Would love to work with every one of them, but we can't do that. We don't have the capacity to do that. But here's the thing. If I were out of state looking to buy a property in Alabama, one of the very first questions I would ask a real estate agent when he or she picked up the phone when I called is, how familiar are you with investment properties? Have you owned rental properties yourself in the past or currently?
Correct.
I think that's a big deal because look, it's hard for a real estate agent to relate to a real estate investor if they've never felt the pain of having a property that sat vacant for 6 months while that investor had to make a mortgage payment. If they've never had a tenant to trash a house before they move out.
God,
So
those are the worst.
they are. So if that realtor has never experienced the pains of being a real estate investor, they obviously have never experienced the joys of being a real estate investor, then I don't know that may be a great real estate agent. That may be a great real estate agent. He or she may be very knowledgeable, very honest, and very trustworthy, but until they have owned investment property, I probably would continue to shop around a little bit for another realtor. I think it's that important. If I'm going to be an investor, I think it's important that I'll work with people who are investors themselves.
That is correct. And not only that, also a very important factor is that being out of state investor is a property management. Find the right property management. And I've been hearing a lot of people complaining not being able to find a good property management. I know a couple property managers, and they're great. I got great reviews and people telling me great things about them. One of the things, and this is my personal opinion from a real estate agent, is I rather work with I will recommend a property management company that is not competing with me in sales. Meaning there's a lot of property managers that also sell properties. So
right.
If I'm going to recommend a property manager and then 3, 4, 5 years down the road, the owner wants to sell the house, that property manager wants to do that sale. And remember, property managers are not in the business to sell property. They're in the business to manage property. So they also don't like to lose properties out of their portfolio because they're going to be losing money. So that's something that you need to keep in mind. I know a couple property management here in the Birmingham area that they do not sell. All they do is manage properties. So those are the ones that I work with because I know in future, if my client wants to sell their property, they'll come back to me. They're not going to try to sell it and create all kind of things of it.
Right.
So, Andy, that's all that I got today. I'm not going to take more of your time. I know you're having a great time with your family over there. So thank you very much for connecting today. And
thank you.
If people wants to get a hold of you and talk about investments, DSCR loans, and, pick up your brain, how can they contact you, Andy?
Yeah, so I appreciate you asking that. And we can actually do DSCR loans in 33 states. So if someone has a mind to buy investment properties in another state around the country, not just Alabama, then please give me a call and let's look at the list and see if I can help you out with that. I can be reached at 205-979-4412. I'm at extension 1. How about you, Tony?
Well, if you want to know a little bit more about investing and need a realtor or a real estate agent that can help you and give you the facts, not just sweet talk to you and tell you what you want to hear, just give me a call, 205-370-3248. and I'll be more than happy to help you with all that. So,
Awesome.
Andy, thank you again for being with us this week, and I'll see you next week.
Sounds great. Thank you, Tony. Have a great week.
You too. Bye bye.
All right. Goodbye.